stock market isn't just numbers and graphs, it's a game. And just like any game, it has rules and cheaters. But if you understand how it works and how to read the signs, you can actually use the system to your advantage. Let me show you what I've learned over the years. This short video cannot explain every detail of the stock market, so I suggest you learn more on your own. I'll give you a quick rundown. Here is the trading chart, that typical chart with all those red and green bars that stock traders have on their computer screen. Like flying a plane, you need gauges and information to pilot through the sky. In the trading chart, without indicators, you'll be flying blind and most likely losing money. The three indicators I use are EMA, Bollinger Bands, and RSI. The EMA indicator, or exponential moving average, helps you see whether a stock is trending up or down. If the stock price stays above the EMA line, that's usually a good sign. If it dips below, it could mean a downtrend is coming. I use the 15, 50, and 200 EMA lines and color-coded them. The 15 line is orange, the 50 line is red, and the 200 line is gray. If the stock price is above the EMA 200 line, that's a bullish stock. When the 15 line crosses above the 50 line, that's a bullish sign the price will go up. When both the 15 and 50 lines are above the 200 line, that's super bullish. The opposite is also true. When the price is below the lines, the stock is bearish. Then you've got Bollinger Bands. I color-coded them blue. These show how wild the stock is moving. When the price touches or moves outside the bands, that might mean it's overbought, the top band, or oversold, the lower band. Think of it as a game of Pong, where the bars bounce off the blue lines as if they were walls. It's not always the case. Sometimes the price breaks through the wall and stretches the bands outward. The last indicator is the RSI, Relative Strength Index. RSI tells you if a stock is too hot or too cold. Over 70 means it might be overbought, which is hot, and due for a drop. Under 30 could be undervalued, which is cold, and about to rise. Combine all these indicators and you'll get a general idea which direction the price will go. You want to buy when the price is low and sell it when the price recovers to a high. Now that you don't have to trade or invest, here's a warning. The stock market is rigged. There are powerful players, hedge funds, and institutions using trading bots and algorithms that move faster than any human. They play dirty. One of their tricks is called short and distort. It's when they short a stock, betting it'll drop, then spread fear and lies to make people panic sell. You'll see fake news articles, sketchy online rumors, and sudden dumps that scare off retail investors. They make money from the selling. And then there's the phrase, buy the rumor, sell the news. It means big players buy up a stock while knowing something good is happening in the back, then dump it when the news actually hits, making retail investors hold the bag and causing panic sells. It's all psychological warfare, but they do have a weakness, the patience of holding through the negative red days. If you buy stock of a good solid company, it will eventually go back up to green and rise higher. Here's a tip. Buy stocks that the major players have in their portfolio. You also need to watch macro events, big picture stuff like government policies or global news. If the Federal Reserve raises interest rates, that usually makes stocks go down because borrowing money becomes more expensive and companies slow down. If there's a trade war or new tariffs between countries, that can mess with prices too, especially for companies that rely on global trade. These events can shake up the whole market even if the individual company is doing fine. Do your research. Look at your indicators. EMA, Bollinger Bands, RSI. Find a stock with real value, and when it dips from manipulation or panic, that's your chance. The market always moves in cycles. After every drop, there's usually a recovery. That's the bull market, when prices rise and everyone suddenly wants in. But if you already bought the dip and held strong, you're already ahead. It takes time to build wealth, but it works. The market is like a casino. It's full of noise, chaos, and tricks designed to shake you out of your money. But if you keep your head clear, study your tools, and play the long game, you'll make it. You don't have to be a genius. Just be smart, be patient, and don't let fear control you. The stock market is rigged, but it's not unbeatable.